Welcome back. So we've got the global setup and we've discussed some levels with Lawrence as well. Now let's talk about individual stocks that need to be on your radar. Lots of earnings pouring through. And our team is standing by with the CNBC-TV18 list of top stocks to watch today. Guys, good morning to all of you. Abhishek, let's start with those big reviews from the BFSI space, starting with Bajaj Finance.
Well, stress has increased for Bajaj Finance and they have increased their credit cost guidance as well. So to begin with, Bajaj Finance has raised their FY25 credit cost guidance to about 2.05% from the earlier guidance of about 1.75% to 1.85%. So it's a 30 basis to 20 basis point increase in the credit cost guidance for FY25. Provisions have increased 77% YOY and about 13.3% sequentially. Perhaps for the first time in many quarters that I am seeing their credit cost on a quarterly basis, annualized credit cost being above the 2% mark. So it was at 2.13% versus 1.99% in the previous quarter. Now, company had a gain, one-time gain from the stake sale that they have done in Bajaj Housing Finance. So about 2,500 odd crores with respect to net realization is what they have got in this quarter. With respect to their asset quality, gross NPA and absolute value has increased by 29.4% on a quarter-on-quarter basis, and as a ratio, gross NPA ratio has inched up to more than 1% for the first time in many years. So it is now at 1.06% versus 0.86% in the previous quarter. With respect to the PNL, both the NIs have beat on our poll, but elevated provisions has meant that the PAT is below our poll. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Yash. He's got a couple of companies that he's tracking, namely ICICI Pru Life as well as Max Financial. Morning, Yash.
Morning, Nigel. So I'll start with ICICI Prudential Life Insurance. It's a weak quarter which has come through for the company. If you speak about the numbers and summarize them, it's a top-down miss. APE, VNB and margin, all three numbers are below what the street was working with, below what CNBC-TV18 poll had suggested. To start with, new business premium, that has seen a growth of 14%. It is in line with CNBC-TV18 poll. The number is 4929 crore. The number that we were working with is bang in line, 4929 crore. Total annualized premium equivalent, that has grown by 21%, but it's a miss when it comes to the estimates that the street was working with. The number is 2504 crore. The number that we were working with was 3,139 crore rupees. Retail AP seen a growth of 26% on a year-on-year basis. It's in line with CNBC-TV18 poll at 2161 crore rupees versus 2108 crore rupees. Value of new business, there's a big miss which has come on the VNB number. It is grown by just about 1.5%, and as far as the numbers that has come through is 586 crore rupees. The poll was 758 crore rupees. Speaking about margins on a year-on-year basis, the margins have seen a downtick of 458 basis points. It is come in at about 23%. The number that we were working with in terms of our estimates was 24.14%. Now, speaking about Max Life Insurance, it's been a good quarter for the company. You speak about new business premium, that has come in line. Apart from that, total AP, retail AP and VNB margin is ahead of what the street was working with. New business premium seen a growth of 25%. It is in line with a poll at about 3016 crore. Total AP, that has grown at 31%. The number that has come in is about 2,170 crore. Our poll was 2,111 crore rupees. Retail AP, that has seen a growth of 26%. Value of new business, to speak about that, has grown by about 23%. It is much ahead of the poll that we were working with. Margin has also come on the higher side when it comes to Max Financial Services.
All right, yes, thank you very much for that. So that's insurance in focus. Canfin Homes and M&M Finance are the other two. We're going to go back to Abhishek on. Abhishek, good morning. Take it away.
Good morning, Prashant. So to begin with the Canfin Homes, for the first time in last 9 quarters, the growth rate with respect to AUM on a YY basis has been arrested from the declining trend that we are used to seeing over the last 8 quarters. So AUM growth is about 9.6% YOY and about 2.8% sequentially. They have improved their net interest margin to 3.75% versus 3.57% in the previous quarter. Asset quality has remained stable and gross NPA ratio has improved to 0.88 versus 0.91% in the previous quarter. With respect to the PNL, NII is at 340 crore versus Kotak Securities estimate of 328 crores, while PAT is at 211.5 crore versus Kotak Securities estimate of 210 crore. With respect to M&M Finance, now their guidance X of gross NPA has been revised lower across various parameters. So to begin with, FY25 guidance for gross NPA has been put down to less than 4% from the earlier guidance of less than 6%. However, net interest margin guidance has been cut to about 6.5 to 6.7% versus 7.5% earlier. Growth has been pulled down from 2x of AUM to 1.8 to 2x AUM. OPEX to assets, that ratio was stated to be less than 2.6%, but now it has been revised to 2.6 to 2.7%. And the new business target that they had set for themselves was about 15% of AUM, but they have reached only 6% of the AUM, and management says that there is more work to be done over here. The return on asset, that's disheartening to see. That target was set at 2.5%. It's been now reduced by about 50 to 70 basis points. The new target being 1.8 to 2% for FY25. So on balance sheet, loan growth of about 20% is perhaps the weakest loan growth that you are seeing in last 9 quarters. Disbursements have declined YOY for the first time in last 13 quarters. Asset quality has deteriorated, so gross NPA in absolute value has increased by 13.7% sequentially, as a ratio also is inched up to about 3.83% versus 3.56% in the previous quarter. Even their housing finance subsidiary, that's seen a deterioration in asset quality, wherein the gross NPA ratio has inched up by 30 basis points sequentially to 9.14%. Back to you.
All right, Abhishek, thanks very much. Let's see if M&M Financial Services becomes the stock of the day, but for the wrong reasons today. Watch out for this one. But on to some happier numbers. Amber, Upasna is looking at this one. Good morning, Upasna.
Good morning. Amber Enterprises reported strong set of numbers. Revenue and PAT came above poll estimates, while EBITDA margin was in line, and the strong performance was mainly driven by strong REC demand and low channel inventories. Now, revenue stood around 1,685 crore with an uptick of 82% on a YoY basis, and REC revenue grew by 104%. While non-REC component grew by 68% on a YoY basis. Company's margins came in at 6.7% with an uptick of 30 basis points on a YoY basis, and PAT stood at 19.2 crores versus a loss of 6.9 crores. So all in all, strong set of numbers reported by Amber Enterprises in its Q2 FY25.
All right, thanks a lot for that, Upasna. Well, let's go across to Rima. She's here to tell us about Coforge. Rima?
So Coforge has reported a good set of numbers. The performance has been boosted by the Cigniti acquisition. So reported revenues have gone up 26%, but even on an organic basis, X of Cigniti, we've seen a top line growth of more than 5%, 5.5%. Margins, though, have come under pressure because of higher, depreciation and amortization costs related to the acquisition. But the key positive is the new order wins. So the order wins are very strong, growing more than 40%. So strong organic revenue growth, very good order booking, and that's why I'm going to go with green for Coforge. There's a conference call which is currently going on.
Well, Rima, thank you very much for that. But Persistent reported numbers as well, and those were really good, right? What about Indus Towers as well? Yeah, go on.
So Persistent was a beat on revenues and margins. This is a company which is seeing very high growth, the fastest in the industry. Top line growth this quarter came in at 5%. They've maintained their margins. Deal wins continue to inch up, 14% up. And the company in the conference call reaffirmed their FY27 guidance of achieving $2 billion in revenue. So strong for Persistent. Only thing is valuations are much higher than peers. Indus Stars, the key positive in Indus Stars is the margin improvement. Margins for the company went up from 61 to 65%, and this is because the company has managed to recover some old dues from Vodafone Idea. So that was to the amount of 1,080 crore that boosted the company's margins, which is why, despite just a 1% revenue growth, the company's profits went up by 15% sequentially. Back to you.
Okay, all right, got it. Rima, thank you very much for that. Let's quickly move on and go to Ritu. There is an update on Paytm. The company has been allowed to onboard UPI customers once again. Ritu, morning. Tell us more.
Good morning, Surbhi. We're going with the green for Paytm because the NPCI has granted, the parent entity 197 Communications the approval to onboard new UPI users, and this comes nearly 9 months after RBI had barred them from adding any new customers. But the approval, of course, is contingent on them adhering to all regulatory guidelines and NPCI norms. Now, keep in mind, Paytm's UPI market share had taken a hit during this 9-month embargo, and it dropped from about 13% in January to 7% in September, although Paytm remains the third largest player in the UPI ecosystem. Now, OCL had earlier got an approval from NPCI to operate as a third-party application provider, with about 13.5 crore UPI customers already migrated onto this new OCL platform supported by the 4 banks. Now, this nod to onboard new users is going to lead to an increase in UPI transactions volumes for the company, and it will allow them, importantly, to cross-sell financial products as a distributor. In fact, yesterday you had founder Vijay Shekhar Sharma speaking about this very opportunity that UPI presents for Paytm during the earnings con call, emphasizing that Paytm was not here to become just another mediocre or fringe player, but to solve for the problem of concentration risk in the UPI ecosystem.
Okay, all right. Well, some good news definitely coming in over there. We'll see how the stock reacts. Thank you for that, Ritu. Let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are Max Financial, Canfin Homes, Persistent Systems, Indus Towers, Amber, Coforge, and Paytm. Stocks with negative news flow around them: Bajaj Finance, ICICI Prudential Life, and M&M Financial.
Okay. Okay, well, that's essentially the list of stocks to watch, but we're going to address one more, and this is Gujarat Fluorochemicals, and I think this is a we told you so moment, not for me, but for Nimesh. The Gujarat Fluorochem subsidiary has raised 1,000 crore rupees from getting investors into its chemical battery business. Now, Nimesh had highlighted this as part of his D Street chatter, and the chatter is now reality. Nimesh, morning.
Morning, Prashant. So it's official now that the Gujarat Fluor in its subsidiary business, which is GFCL EV, they've raised 1,000 crores at an equity valuation of 25,000 crores. So it's a big deal. They've raised money from some marquee large family offices. They've not mentioned the name of those investors. The funds will be essentially used for capex. Now, the EV battery chain opportunity is estimated to be $300 billion by 2030. So that's a large TAM that Gujarat Fluor can address through. Now, if you look at the subsidiary business, one, the battery chemicals, second, cathode active materials, and third, the binders. So it's a significant development. I'm saying significant because the Gujarat Fluoro's market cap is 50,000 crores. Development. The only caveat here is, Prashant, the stock is rallied pretty hard. The first time when I highlighted, the stock was at 3,400. Now it's almost at 4,700. So in the price to some extent, some large market investors.
All right. Thanks a lot for that, Nimesh. Bang on yet again. So good one with regard to Gujarat Fluoro. But let's move to Manisha about what's going on in the commodity market. Manisha, morning.
Morning, and thank you for that, Nigel. When I'm looking at all-time highs yet again for gold and silver prices, overnight has been great moves on the higher side here. So when you look at the gold prices, we have seen 20 here. For the silver prices, overnight gains have been to the tune of 3%. International markets are trading at a 12-year highs, but the Indian markets have hit a lakh rupees a kg for silver. Strong gains is what we've seen come back for the crude oil prices, almost 2% of gains in the overnight market. This is after there have been some reports suggesting that we perhaps are looking at tight crude oil prices declined by 7%. So some buying opportunity on the lower side is what we are looking at in sense of prices.
All right, break, but we're going to leave you with some good news as we slip into this break. 1 million Indians are now making smarter investments with the help of Money Control Pro. Money Control Pro, which is part of the listed entity Network 18, has crossed nearly 30% higher than its closest competitor, Economic Times, underlining the decisions. If you haven't subscribed yet, scan the barcode on your screen now to be